Welcome to Whiteboard Wednesdays, Real Talk with a Realtor. I'm Sharice Went, also known as the Agent Lady, and today, I always do my drum roll, we have Ed Bonnano from Acre Mortgage.
Thanks for having me.
Absolutely, Ed. And you're going to talk about something that people always have questions about, FHA 203k loans. Ed, what the heck is it?
It's an amazing program that FHA invented.
Okay.
I don't even know how long ago, but
Okay.
it allows you to finance all the renovation costs into a home. So you can go in, find the home in the neighborhood that you want, but maybe it's like the ugly duckling on the street or even just a shell.
Okay.
And you get to go in there, put your own personal touch on it.
Okay.
And with that, generally when the job is done, you're building equity in the home versus buying something that's already been renovated by either a flipper, a contractor, builder, whatever it is. You're buying it at the top of the market.
Okay.
So not only does it give you the opportunity to put your own personal touch on it, but there's a good chance that you're actually building equity that you wouldn't have if you didn't choose this program.
Okay, so if I understand correctly, you can buy the home, so they'll give you money to purchase the home, but they'll also give you money to renovate it.
Exactly.
That's freaking awesome to me. I don't know about you guys.
I love this program, yeah.
Right.
Yeah, so you have your purchase price plus the renovation costs. There's also a contingency reserve in there because the contractor's gonna go in and they're just looking at the home with the naked eye. They're not digging behind the walls, under the floors, nothing. So they're giving you a bid based on what they see.
Right.
And we all know if you've ever been involved with a renovation project, things do happen, things pop up. So there is a contingency reserve, which is 15% of the actual renovation costs.
Okay.
So anytime that anyone asks me, how do you structure this? Those are the three major factors: your purchase price, renovation costs, and the contingency reserve. Okay. There are other things, smaller things involved, but it's going to give you a roundabout of what your total loan amount is going to be and what your down payment is, because that's what people are trying to figure out.
Exactly.
With this program, you only need 3.5% down.
Because it's that FHA part, right?
Exactly.
Okay.
Excuse me, exactly.
No problem.
Yeah.
So I have Streamline versus full. Can you go into what that means?
Absolutely. The names pretty much say it all. The Streamline, nice and easy compared to the full. The Streamline is going to be capped for the renovation costs. Generally speaking, it's going to be $28,500. Online, you'll see $35,000. But that $35,000 includes not only the renovation costs, but the contingency reserve, permits, draw payments, title updates. There's other things that are involved. So $28,500, over the course of my career, that's the number that I came up with, and it 9 out of 10 times that's where it works.
Okay, cool.
With that, for either program, you need to have a fully licensed and insured contractor. Us as lenders, that's mandated, but we prefer that. Sometimes you can get away with doing some self-help, but with self-help, if you are a licensed contractor, it's really limiting you to how much money we're actually going to allow to financing. So we try to steer clear of that.
Okay.
But with the Streamline, the best part about it is if the permits are pulled, or as soon as the permits are pulled after you take ownership of the property, we'll release half of the money right then and there. It's going to be a dual signature check made out to both the homeowner and the contractor. And the idea is the contractor is going to complete the job with all of that money. And then when the job is done, we'll release the rest.
Okay, so 50% for the Streamline, and then another 50% once it's completed.
Correct.
So just a one draw system in essence.
Yeah, exactly.
Okay.
Exactly.
And then the full.
The full is once we hop over that $28,500. You're going to have your contractor involved, obviously, in both of these programs. But you have an FHA consultant. The FHA consultant is basically our guardian angel. So he's going to watch over not only us as a lender, or he or she, exactly. I'm sorry, audience.
It's okay.
He or she are going to just make sure the contractor is doing everything according to plans, doing everything to FHA guidelines, not cutting any corners. I've had consultants in the past that 9 out of 10 times they're going to review the bid and make sure that the contractor isn't trying to rip off the homeowner. Gotcha. So I've had some contractors that have had to scale back their numbers because the consultant is saying they're being overcharged. That consultant is going to do, once they receive the bid from the contractor, they're going to do their own write-up. So they're basically doing an analysis not only on the potential value, because a lot of the consultants that we use are actually licensed appraisers, so they actually do a market analysis as well to make sure that the renovations are feasible. So it's a feasibility study.
Right.
And with that being said, they put all their paperwork together. At that point in time, then I actually can step in and issue the disclosures and whatnot. So I can't do anything until I have either the bid on the Streamline or both the bid and the consultant's complete write-up.
Gotcha.
Because everything is based on the bid
Right.
and the write-up.
So the consultant, that's an additional fee,
It
right?
is.
Okay.
Generally speaking, that's anywhere between $700 and $1,000,
Okay,
depending on the size of the job and how many draws. There's
Okay.
generally 3 to 5 draws on a full K.
okay, 3 to 5 draws, okay,
Yep.
good. I did have a question, I think, in regards to the contractors, I know you said licensed and insured,
Mhm.
but from experience, it's probably also best that they've done an FHA203k
Yes,
before?
it's always a good idea that they have some type of experience because,
Right.
yeah,
Contractors
if they don't
and paperwork?
understand the program, I'll be involved
Right,
from start to finish, and
Right.
even after settlement, obviously, I'll still be involved until the whole project is done.
okay,
But communication is key on this program.
Okay.
Everybody has to be on the same page. If somebody falls off or isn't listening, that's when it starts to unravel.
right,
So you have to make sure that you have a contractor that understands the program. I'll obviously, if they've never done it, but it's somebody that you trust and you need to have on your job,
Right.
I'll absolutely, handle them with special kid gloves, But
Fair
generally
enough.
speaking, and you can look online. There are 203k experienced contractors you can find online.
right,
I think on HUD's website you can find them as well.
right,
But you have to make sure that you have that relationship with the contractor. You're working with this contractor day in and day out for however many weeks or months. So you want to make sure it's somebody that
it's gonna get
you're
it
going to
done.
get along with and can get it done.
Mhm.
Now, the big aspect of the full K versus the Streamline is there's no startup money. So you need to make sure that this contractor has all their ducks in a row, has their own lines of credit, has their own relationships with their vendors, has some type of reserve because they're starting this job with their own funds. But if they don't have the funds, then the homeowner needs to know that they need to start it with some of their own cash.
Gotcha,
They get paid at the end of each phase. So
Right.
whether it's 3 to 5 phases, the FHA consultant is going to come in. I usually tell the contractor and the homeowner to reach out to the consultant within 48 hours prior to whichever phase being completed, because that
Okay.
gives them enough time to fit it into their schedule. So
Gotcha.
there's no delays in getting paid,
right,
because we want it to just continuously flow. We don't
Right.
want it to stop because
they didn't get paid for the last.
exactly.
I think that's
Yeah.
pretty much covers it,
Yeah,
right?
it does.
Right, and
In a
then-
nutshell.
yeah, I guess the other thing is interest rates. How does that differ from a regular, maybe FHA loan?
So it's a higher risk loan. Anytime that you're ripping a property apart, it's a huge risk in terms of, God forbid, something happens, you can't pay it, we have to foreclose. Now we're trying to sell a home that is half renovated or just
Gotcha,
a complete shell. So
right,
the chances of us actually recouping anything at that point in time, anywhere close to what's actually owed,
right,
is slim.
gotcha,
So it is a higher risk loan. Rates are generally 0.5% higher than standard FHA rates. So
gotcha,
if you have excellent credit, you're probably looking at like 4.25% on a 30-year fix today. But even if you don't have excellent credit,
Right.
let's say you have a 640, you're probably still only at 4.625 on that, which
Okay,
isn't,
that's
it's not a
not
huge
bad.
gap.
right, exactly. People are being charged more for other things.
Right.
So, would you say that this loan is for everyone?
It's not for everyone.
I know
It is
it's
not.
not.
It is definitely not for everyone. I wish it was,
Right,
but
right.
no. Patience.
A lot of
Communication,
patience.
yeah. It's if you need to move quickly, you need to get out of wherever you are now into another place. It's definitely not for you.
Okay, fair enough.
Another thing that I also definitely want to touch base on the full is FHA will actually allow you to escrow up to 6 months of your total mortgage payment. So that includes taxes, insurance, your principal and interest payment.
That's pretty freaking awesome. So not for everybody, but for those who can stomach
Yes.
the process, which there obviously are additional steps, something definitely to look into. So thanks so much for
my
coming
pleasure. Yeah,
to
thanks
the
for
Asian
having
Lady
me.
Show. That sums it up. How do we find you, Ed?
How did you find me? No, actually, if you go to HUD's website directly, I should be listed on there as the top 203k lender in the city.
Okay.
Acre Mortgage and Financial Inc. Again, it's my company,
Okay.
1800 JFK Boulevard here in Center City.
Okay, and we'll also have your information at the end.
Wonderful.
So that sums it up, guys. Remember, friends don't let friends buy or sell real estate without the agent lady. Make it a great day.